Our morning call. Hope you're having a good morning. The SGX is suggesting a bit of a pullback, but let's see how things pan out from there. But let's focus on a couple of stocks then. JK Paper, well, that was sharply higher in trade in Friday's trading session. It was locked up close to around 10%. To understand how input costs are cooling off, what is the demand on ground as well, and the outlook on paper prices, well, we're joined by Mr. Mehta, the President and Director at JK Paper. Hi, Mr. Mehta. Good morning. Coal prices, caustic soda prices as well have cooled off, and that's good news from a margin perspective. But before we get to that, I was just looking at a couple of articles last week, and the new education policy has got the green signal. That'll be good for writing, printing paper, right? And I think more than 50% of your capacity is linked to WPP. Could you tell us, will that be a bit of a tailwind on demand? And also, if you could give us a sense on pricing. Board pricing is a little bit softish, but WPP prices are more or less stable. Compare those prices with quarter 3. Go ahead, sir.
Sir, good morning. And rightly you said about the education policy. In fact, this was expected to provide a good demand driver this fiscal year. And in fact, some printing and some publications have already started in line with the new education policy. But yes, the contents and other things, now, since we have seen the green signal, I would say that the writing and printing paper category, the demand should be strong, and the robust demand would be a good for the writing and printing segment. And our capacity is close to 60% for this category, and it should be a good period for all of us. And the prices are fairly stable. In fact, the prices were relatively better for writing and printing, including our office paper, which is also part of the writing printing copier category. So that should be good for the industry.
Mr. Mehta, sure, the industry demand is picking up in writing and printing, as you said. But can you help us with some numbers? You had guided for ending FY23 revenues at about 6,500 crores, which means you would have to do a little above 1,500 crores in Q4. Are you on track to do that? And what could the growth be in FY24 as well?
See, the Q4, as I said, that we should be close to 6,500, and we are in line with our projection. And in fact, the January, February, these 2 months were fairly on the same line, and the March should also be in the same line, because we have already done almost 18-20 days of March now. So it is in line, I would say. And the year 23-24, I would say the writing printing category should do well. And at the same time, packaging board also, it should do very well in time to come, because the packaging board was slightly, we have seen a drop this quarter. There are many factors. So, but in coming year, it should do very well the packaging board as well.
Okay.
So, in fact, we should cross 7,000 crore in 23-24.
All right, 7,000 crores, 6,500. Mr. Mehta, I'm just looking at it mathematically. You did 1,600 crores in the past quarter. So, this 6,500 crores should definitely be in the reckoning. I want to know how much we could beat that by. But we'll take it as 6,500 crores for now, with 7,000 crores going ahead as well. Two-part question. One is, you gave us the WPP prices are stable Q on Q. But what about board prices? How much lower are they? If you could give us a rough number, Q4 versus Q3. And more importantly, what does it mean for margins? Because raw material costs have cooled off far more. Coal prices, caustic prices as well have fallen off. So what is the outlook on margin? If you could give us a margin band.
See, the packaging board prices, certainly they have come down. I would say that close to 12 to 15% drop in the packaging board prices last quarter. And this is not a sustainable prices, because of course there is some softening of the input cost. But for the packaging board, in fact, 50% of the input, which is mechanical pulp, which is imported, because it's not domestically produced pulp. So that cost has come down. It has started coming down, but the impact is going to be felt in end of Q1 of next fiscal year and Q2. So right now the cost is higher. So in fact, there is a severe dent in the margin of packaging board in this quarter. Hopefully next quarter, it should be better. The packaging board prices, they need to be revised upward. In fact, we have done a price correction, something around 3% this quarter, but the impact will be seen in the next quarter only. And
what does it mean?
Also, there is some need of a
Yes.
price correction for packaging board.
Okay, all right. So you're optimistic that prices will move up post the weakness that we're seeing in the packaging board. But final question before we let you go. Tell us, since input costs have cooled off, what is the margin band we should work with? You told us last time that the margins that you'll deliver may not be sustainable. But what is a broad margin band we should look at?
I would say this quarter, it should be more or less in the same band of Q2. I am not comparing Q3 because the Q3 prices, input cost was to some extent for JK paper, it was okay. And the prices were better and net sales realization. But this quarter, I would certainly say that margin maybe a lower bit by 1 or 2%. We'll try to see what we can do.
We'll leave it at that, sir. Thanks a lot for joining in and giving us an update on the business. That's JK Paper. They see demand picking up quite a bit. They have a target of 7,000 crores of revenues in FY24. That's